Hi traders and welcome to the Technical Analysis Market Watch on Friday the 19th of July. So we've seen some really big moves in the indices and the currencies this week. We've seen volatility at its best at the start of earnings season. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we all week basically it has been selling off from the previous highs that we reached. We hit the basically 68 cents. We can see that we only just touched it and it started to sell off. The obvious place it's going to come back to is the 20 moving average when it hits a resistance zone. So, no real question there that this was the target that we were going for. There is a secondary target at around that sort of 66.80, which is where the highs are here. And it wouldn't surprise me to see it continue on and push past that because the moving average has been pretty good all the way up, as you can see, but quite often it has overshot the mark and landed at the next serious support. So, really, it's very heavy support at 68.80. There's no worries about that. I would be surprised if we broke that without a yelp. But the 20 moving average may well not hold this in the current momentum that we're seeing. It is underneath it at the moment. If it starts to trade above it, it's a very different story. And then we can start looking at moves up again into the 68 cent mark. But this time, it's going to be a lot easier to get there, you would imagine, because we've already seen that breakthrough. And generally, the first move is the hardest move. And once it's done that recently, I mean, obviously it's done it in the past, but once it's done it more recently, it's generally a freer path to get to. So what we're looking for now is either a close above the 20 moving average again on the daily, at which point we'll be looking for a series of higher highs and higher lows on a smaller time frame. And then we trade that momentum back up to 68 cents, or we see the continued weakness and we would be looking at parking spots at around that sort of 66.80. At that point there, we would be looking for that same role reversal that we're looking at now. We're looking for a series of higher highs and higher lows at this level. Okay, so that's really pretty straightforward trading on the Aussie USD. We will go over to the US dollar CAD. Again, this one played the game really nicely. It bounced off the level where it should have bounced off, obviously. You can see very heavy resistance through there, so it should have been support at this level, which it did. And then, of course, it spent the week rising all the way to the exact level that we'd want it to get to, which is 137. Now, I know quite a few people got this trade, which is great. And it's a very straightforward one. Look, this is very bread and butter trading when we're seeing sideways moving markets bouncing in between support and resistance. So I'm very pleased that everybody was able to get, or a lot of people were able to get that trade. Very heavy resistance at this point here is always going to give us a very heavy level of support, very similar to what the Aussies got now. It's it would be unusual, I guess, to see it break through without a yelp when we see that, and the Aussie was very similar to that at that 66.80. So just be mindful of that on the next trade. Where we go to from here now, look, the heavy resistance is just a little bit above this at around that sort of 137. 30 to 137.50. We can see a lot of price action at that point there that couldn't get through. If we see a little bit more strength kick in from here, I reckon that 30 to 40 points is probably what I'd be looking for. After that, though, I'd be waiting for a bigger signal. So you should have already taken profit from this trade here because this was the level. But if you're still in and you want a little bit more, that 137.30 would be the target. If we start to roll over from here and we start to push down again, that'll be the third lower low or lower high, in a row. You can see lower high, right through there. So if we do roll over here, I'd be again targeting that sort of 136 area. So not bad trading on the CAD, but I think you just have to let price action unfold on it. Over to the US dollar yen. And obviously extraordinarily falling from last week. We can see that it landed on our support level at 157.20, only there for a handful of days, and then it broke through straight away. So very heavy selling. Look, it was pretty obvious it was going to be a really good chance of falling here because we had the divergence that we were talking about, so we would never be trading it long there. Once it broke through the 20 moving average, you were able to get involved. Look, this area here was heavy support, should have been anyway. It was only there for about 4 days. It did it though. It did hold up. That's what you'd normally expect when a market is really pushing hard but hits a very solid level. But of course, it continued to sell off all the way to 156. I think our ultimate proper target is still at that 154.80 to 155. I think that's where there is very strong support. It's had a very big rebound today, however. So just be mindful, though, that it's got some resistance in front of it again. Now we've got resistance there and there. And also the support that was had here at that 157.80. So if it rolls over again at that 157.80 and starts to push down, I'd be looking at targets around that sort of 154.80 to 155 as the target for this. If we're trading above that 157.80 to 158 again with a daily candle, until it's broken the 20 moving average, I wouldn't touch it. But if it breaks through the 20 moving average, then I would look at moves back up to these previous highs. But that's not as likely as a reversal around this level here. And I think probably the target of 154.80 to 155 would be a bit more of a go-to for me. All right, over to the dollar index. This has been a real interesting one. We've seen, we saw a massive move, obviously a big shooting star here, and then a push down past that, the very, very heavy support. We always said 104.20 to 104 is very heavy support for the dollar index, and it broke through. It only took 3 days to do it, and it certainly did, but it has reversed everything. It got to as low as effectively 103.60, and has reversed all of that gain, it's gained it all back up to the resistance point now. This is a very important area, because if the selling is going to continue on the dollar index, this is where it will roll over. If we start to roll over here and we start to see a series of lower highs and lower lows, then we're targeting the 103.60 as the first base. But there's a very strong chance that level will get broken pretty quickly, and it'll push right down back to that 102. So just be very careful here. What we want to see is a reversal back up. This is what we talk about all the time. So a reversal back up to that broken support. If it rolls over here, the first target is 103.60, pretty straightforward. But after that, good chance it's going to continue on. If we get above this level though, then we might start to see that strength return. This is a reaction, obviously, to the weakening markets that we've seen in the indices that we'll get to in a second. But if we get a daily close above 104.30, then I would be looking at targeting longs back up to the 20 moving average in the first instance, wherever that may fall, whether that's at 104.70 or 104.50, whatever that is. At that point, we'll be looking for the longs, but it needs to close above 104.30 on a daily in order for us to be even looking at that. And then we just follow the higher high, higher low momentum on the smaller time frames. The euro, of course, is the one that really captures our interest when we're talking about dollar index because of its inverse nature. And it did the same thing. Obviously, it hit the target there at 109.50, basically just touched it and sold off. It's in the same zone where it's had an extraordinarily big move up to a level where you should have taken profit, because obviously all the signs are here that you should have. So we know that's what it's there for. If you haven't, it could still reverse for you and, basically spin around here and push up. That could happen. But really, ideally in a perfect world, profit should have already been taken at this level here. But it is a very strong level of support now. Okay, now that it's broken through as a resistance zone, now that it's above there and trading here, if we get consolidation above this level and we see a series of higher highs and higher lows on a smaller time frame, you can look towards taking it long up to about that 109.50. in the first instance. If we get a daily close below that 108 sort of 70 area, so if we're trading under here with a daily close, then I would be looking at targeting back down to the 108 again. So the two ranges are pretty straightforward, really. If we get a bit of a bounce off from here, smaller higher high and higher lows up to the 109.50. And if we get a daily break below 108.70, then we start to target the 20 moving average at around that 108.40 and lower than that all the way down to the 108. So good trading on the euro coming up. The volatility has certainly returned. All right, the final one, the S&P 500, big sell-off this week. Reasonable sell-off given where we were. Hit the 20 moving average and pushed past it today by a considerable amount too, by about 30 points. It has recovered quite a bit of it. The only thing I would say on this is that really it's support where support should be. The 20 moving average has been catching it all along. I must emphasize that we are in earnings season and we will be for the next few weeks. So these indices are going to be a little bit volatile. We've seen nearly a 2% correction on the US 2000. So that's generally a bit of a leading indicator. We're down 0.7%. So, but it was down a lot worse. I think that's probably the highlight. It did get worse than that. It pulled back up to the 20. If we find support here at the 20 moving average, then we could look at taking longer moves with a change of trend, higher high, higher lows on a smaller time frame, back to the previous high at around that 56.70 area. But a daily close below this level, if we get a daily close below the 55.20, I would be starting to look at that sort of 150, 450 as the next target. I'll pop a line there. So that would be the next target if the daily closes below the 20 moving average. So good trading potentially starting to move on the S&P 500. All right, everyone, thank you for joining me this week. It's been a great week's trading. We've seen some really good volatility and some really good levels hit. So hopefully you're able to take part in that. Have a fantastic weekend, and I look forward to seeing you all next week.